Hi, I'm Ross from Smith Property Accountants. I'm here to talk about low-hanging fruit. It's 6 easy opportunities that you can put in place, and the whole idea is that you can put these in place quickly. Some of them you can do today, some of them you can do over a week, and you can put them in place quickly and easily to get more back from your property and make more cash, get more profit from your property. The first one's really easy. It's, are your rents at market rates? So if you're not quite sure, a good idea is just to get a rental appraisal. If you're currently using a property manager, get an appraisal from a different property manager just to check that you're at fair market rates. If you're not at market rates, put in place quickly a plan to increase it, and if you need to increase the rent, make sure you get the relevant notice out this week so that you can get more rent coming in, which obviously improves your profit. Second one is a real common one. It's too much floating loans. A lot of people like to float, so it gives them flexibility, but what generally happens is you float and 12 months later you're still floating, and 2 years later you're still floating. Standard floating rate is about 5.8%, whereas if you fix for 6 months or 12 months, the interest rate's normally only about 4.5%. So you can save over 1% in interest. So if you had a $100,000 loan floating, you could save about $1,000 a year just by fixing it for 6 months or 12 months. If you fix for 6 months, you're still going to have that ability to change it around really quickly. 6 months just flies by. The third one is set up an AP to a savings account. This doesn't really save you any money, but it makes you put money away and it disappears out of your account every week as an AP. And generally, if you put it into an account where you don't touch it, you're slowly going to accumulate money for a holiday or to buy a special item, a big spend that you might have coming up. And yeah, it means when you want to go on holiday, the money is actually there rather than skimping and saving or putting it on a credit card and owing it later. Fourth one is easy one is review your insurance costs. There's a website, Initio, that has online insurance quotes. So it takes you about under 2 minutes to get an insurance quote. So what I would suggest you do is get your property details for insurance and then go on to Initio. It's www.initio.co.nz. So that's Initio. www.initio.co.nz, and yeah, it'll take you under 2 minutes to see what your insurance cover could be with them, and it gives you a real good comparison, a real good starting point whether you could save hundreds of dollars on insurance. Fifth one is probably one of my favourite ideas, and that's looking at your current properties. What can you do with your current property? Everyone gets carried away with trying to buy a new property. Rather than doing that, look, can you renovate it? Often you can get $20 to $50 extra a week in rent for a renovated property. Should you add insulation? Should you put a heat pump in? Can you add a minor dwelling? Can you subdivide? Can you add a bedroom? All these things can really improve your rental, give you more rent, and yeah, give you more yield and then more cash flow at the end of it. And they're real simple, real easy ones. They're not a big spend. It's something that you should be able to get done quickly. My sixth point and my last point, more from an accounting and tax point of view, is do you have a large current account within your rental company or trust, and also a personal house debt? So for example, your company that has rental properties might owe you $100,000. If you still have $100,000 personal debt, you might be able to borrow the $100,000 in the company. The interest then become tax deductible, and then you pay off your personal debt. On the $100,000 example, it might save you about $4,500 in interest. It can save you about $1,500 a year in tax. So it's actually quite big just on a small amount. And we often find there's a lot of people who actually have large current accounts, and you can be more tax effective. Again, it's a nice easy switch. It's not a huge restructure. It's not a huge problem or huge cost. Cool, that's everything I've got for you today. Hopefully you've enjoyed that. And if you're looking for more property accounting tips and tax tips, I'd suggest you like our Facebook page, as we're continually going to put up more videos like this, have seminars, webinars, and also put a lot of good content all about property investment. Thank you very much.